You're a first-time buyer looking to get on the property ladder in the UK, and it's all a bit overwhelming. I get it, I've been there, and I help people with it day in, day out. Now, the important part is it needn't be. With a bit of preparation, you can get yourself mortgage ready, make the application and the process as smooth as possible, and really give yourself the best chance of getting a great mortgage that's going to get you that home. In this video, we're going to break down for you some of the mistakes we see first-time buyers make and how you can counteract those to actually get ready to get your mortgage application going. We're going to look at some of the basics around mortgages and how you can understand some of the terminology that you're going to be diving into, whether that's you going it alone or whether you're working with a mortgage broker. And we're going to be looking at some of the products and schemes out there that can help first-time buyers get on the ladder. Mistake number one is not knowing your credit profile. There are three main agencies that lenders will look at, being Equifax, Experian and TransUnion, and you can get reports from them that show you the information that lenders are going to get to see about you and your financial history. Now, by getting on top of your credit report nice and early, you can make sure that it's actually painting a true and accurate picture of you. You might have moved and not updated addresses with previous card providers or something like that. There might be missed payments or late payments that you're not aware of on there that you need to get rectified, or there might be errors. But by getting on top of this stuff early, you can really make sure that when you do find the right home and when you do go for your mortgage, that you can paint yourself in the best picture as possible. Picture it the other way around. We found the dream home, we're then scrambling around to get the mortgage application in, and suddenly all this stuff comes up that we weren't aware of to start with, and that could really affect your borrowing power and your ability to obtain the mortgage you want and need to get that dream home. So we'll include a free link to the three main credit agencies below. It comes with a trial period before going into a paid subscription, so be careful and treat that as you want to. But by getting on top of it, you can really help make sure that you know what a lender's going to be seeing about you. And if you're working with a mortgage advisor as well, it gives them the accurate information to make sure that they are presenting the correct and accurate products that are going to be available. Some other top tips: get on top of the electoral roll registration, make sure that lenders can find you nice and easily. That includes updating things like your bank addresses, and ultimately doing this is going to put you in the best possible position to really get the mortgage that you're going for. Mistake number two is then really underestimating the fees that come with taking out a mortgage product and buying a home. So you might think of the obvious ones being stamp duty. There are some nice, at the moment, first-time buyer allowances that help with that, but in certain circumstances there will be stamp duty bills to pay. When you take out a mortgage product, you're going to have your monthly payments obviously, but some mortgage products will come with product fees and valuation fees. Now, normally if a mortgage product has an upfront fee on it, it might come with a lower interest rate, and so working out the payments over the course of that mortgage product rather than just looking and getting stuck on the interest rate will be important. You've then also got other costs to consider. You've got moving costs. Is there going to be a cost to physically move you from where you are now to where you're going? You're going to have solicitors' costs. They're the ones who are going to be doing the conveyancing work, which ultimately is the legal side of the proceedings to make sure that you end up with that property in your name and that the bank gives the money and all of that sort of side of things. So there's loads of other costs that go into buying a property. You may also want to consider getting your own survey done. Now, the lender will do a valuation as part of a mortgage application, but really that valuation is for them, whereas a survey is for you. And somebody you want to get somebody you can trust, or somebody that's been recommended to carry out that survey for you. And there's going to be a cost associated with doing that. But when you're making a big expensive purchase like a property, spending a few £100s up front on a survey may well be a good idea. You also want to think about some other costs that are going to come alongside home ownership in general. So not just the application, but you're going to have to then insure that property and make sure that you've got buildings insurance there to rebuild should it, heaven forbid, ever fall down. You then also want to consider things like contents insurance, but then you also want to consider the right type of protection insurances for yourself, whether that be life insurance, income protection, critical illness cover, family income benefit. So you can quickly see that we can dive into all of these in more detail, but ultimately there are a number of costs that come with home ownership. So getting a view as to what they are, getting some real good advice on it, can be a great first step to truly understanding the costs involved. Mistake number 3 is not understanding how your paperwork is going to tell a story about you. So for the employed, we want to make sure that our pay slips are accurate and correct, updated addresses and everything with our employers, but are also paying the amounts we think they should be paying. Equally for, bonus payments and commission payments, making sure that that is a true reflection of what you earn and how that lines up with your bank account, your bank statements as well. For the self-employed amongst us, if you're a sole trader or a limited company, you want to make sure that your tax return is accurate. The tax calculation and tax overview documents that you're getting are a true representation of the money you're taking and drawing down. And for the limited company directors, equally making sure that your accounts are up to date and filed and accurate, and the information within there that is, can be used and presented properly. Now, equally going beyond this, there are other areas to be careful and watch out for. We don't want to be straying into our overdraft too much. We want to be very mindful of any use of kind of buy now, pay later style credit. An overuse and reliance on that is going to tell lenders, hold on, should I be lending to this person? And what are they responsible with their money? Are there missed payments, late payments that are coming out for us to be aware of? Really getting a clear view of the paperwork and how it's telling a story is going to be really important, because at the end of the day, a lender doesn't know you. They don't trust you like a friend would. Let's understand how much deposit you really need as a first-time buyer. Now, there are exceptions to almost everything we'll say here, and we'll come on to look at some schemes that are available to first-time buyers later in the video, but let's keep things really simple. Now, a deposit is effectively the amount of money you're going to put down to buy that property, and it's going to affect something called the loan to value. Loan to value simply looks at the loan against the value of the property that you're buying. So let's keep it really simple with numbers. £100,000 is the price of the property you're buying. You've got £10,000 you want to put in, and that means that the bank's going to need to lend you £90,000. So in that instance, you're looking at what is called a 90% loan to value product, because you're putting in 10% yourself to make up that purchase price. Now, the general thing to remember with loans and loan to values is that, generally speaking, the lower the loan to value, the nicer the rate you're going to end up getting. So the bigger deposit that you can save and work for is going to ultimately usually mean that you get a lower rate, and that's going to help your monthly payment. So let's think about a couple of practical takeaways here then. So you need to weigh up, is it worth saving that bit longer to get that bit more deposit, and it's going to bring your loan to value down and then hopefully help with your product choice and your rate ultimately? Or actually, is it better to go with a smaller deposit, get on the property ladder, and look to build up your equity in the property over time by making mortgage payments, and even considering something like overpayments too. Now, we'll talk about overpayments in a separate video because they themselves are a whole interesting topic, but it's really worth weighing up and really understanding what your longer term plan for home ownership and how you're investing in that property is going to go. Let's take a look then at some schemes that are designed to help first-time buyers like you get on the property ladder. Now, it should go without saying that eligibility is key here. Not everyone is going to fit the criteria for every single scheme, so understanding your circumstances and making sure this applies to you is going to be really important. I'm also not going to describe any scheme in precise detail, because anything we do go into is probably going to be outdated quite soon, and we want this to be a useful resource for years to come. So if you do want that level of specific individual help and support, which I do recommend that everybody gets, get in touch with a mortgage broker, and they will take you through the schemes that are available to you based on your circumstances and your criteria. But let's have a look from an overview point of view. So the first one is the LISA, or the LISA, the Lifetime ISA. This is a product that helps you save and actually earn on your savings to go towards that deposit, and give it a bit of a boost for the first time buyer purchase. Different LISA providers out there, look into them carefully and make sure, again, as I say, you're eligible for that sort of support. Secondly is the idea of the low deposit mortgage. We touched on loan to value previously, so this is actually, are there schemes out there that can help you with a 5% deposit rather than a 10 or 15? In the right circumstances, there might also be products out there with a 0% deposit. be really careful, make sure you know what you're getting into and make sure, again, it's right for you. But, you know, it can be a great way to help get on the ladder. You then might also want to consider other methods of buying, like shared ownership. So again, we'll do a video on shared ownership in its entirety, but this is ultimately where you buy a proportion of the property and rent a proportion of the property. And it can be really useful for helping people get onto the ladder, you know, in a type of property that their family can live in. Finally, there might also be some family support available for you. Now, this could be through the use of a gifted deposit, if your family is so generous, or it could be through other schemes such as joint borrower sole proprietor, which basically means that the property is owned in your name only, but perhaps mum or dad come on the mortgage to support and help give that affordability a boost. You know, can be a really useful thing if you're starting out in your first job and you're got a clear career path there where the salary is going to go up, and hopefully you can take on that mortgage in your own name one day. There might also be schemes that can use equity held in parents' properties to use as your deposit. So rather than needing to save the cash deposit, if they've got enough equity in their home, we can use that as the deposit. The lender will put a charge against that, and then that will help you get on the ladder and your affordability. So I think the key thing for this is don't focus too much on any of the particular schemes, but know that there is support for first-time buyer out there. You know, lenders at the moment are even offering enhanced affordability, so helping first-time borrowers borrow a little bit more to get on the ladder and make home ownership a real possibility for you. As I say, everything is down to your circumstances and how that meets each sort of scheme's criteria. So get in touch with an advisor, go through your specific circumstances and make sure you're finding the right support for you to help get you on the ladder as quickly and as effectively as possible. So hopefully that's been a useful overview to get you up to speed as a first-time buyer and what you should be doing. I think to recap, get on top of things early, look at your credit profile, get your documentation in line, try and find those people that you're going to work with, be it a mortgage broker, be it a solicitor, be it, you know, people to move you. Recommendations from friends and family is always a great place to start. But if you do want our help, we're very happy to. We offer a free consultation at Triple H Mortgages to help you. We'll dive into your circumstances, make sure some of the things I've talked about in this video can really apply to you and show you in detail what's available for you and how you can hopefully get on the property ladder as soon as possible.